Next up, we have Dirk Debruin. Dirk is sort of this citizen of the world. You'll find out why I say that in a few moments. And he has an interesting story as to how he got into the world of cryptocurrency. What I like about him is he's really good at taking the novice, the person who doesn't have much understanding, and saying, here is kind of the way to gently walk into this space, understand it, and get yourself going. It almost seems very natural for him to be able to take somewhat complex things and simplify it and say, start here, think about this, next do this, and go there. So it's a really great interview for someone who is new to the space, but at the same time, if you have some experience in cryptocurrency, I think you'll get a lot of value out of this interview also. So let's jump in. Dirk, thanks so much for taking the time to have this conversation with me. I'm looking forward to it.
Awesome, thank you for having me here.
Now, I think we're in vastly different time zones. Are you somewhere in Asia?
Yeah, I am currently in Asia, so it's pretty late for me, but that's okay. I mean, crypto never sleeps, so.
You are right about that. If nothing else, we've learned that crypto does never sleep, which is one of the things that's different about that than other markets that we kind of watch. So tell me how you got into this. What's your story? How'd you get into doing what you're doing?
So it's interesting. I actually accidentally bought Bitcoin in 2014.
How do you accidentally buy it?
Yeah, because I didn't know anything about it. And I was doing online business at the time. And my friend bought some Bitcoin. He's like, hey, I bought this digital money stuff, like it's interesting. So I just bought some Bitcoin back then. And I never really knew what it was about. So that was I got into it, and I held on to that for probably about a year and a half. That was literally the bear market after the first time went crazy. It went above $1,000. I held on to it, and it didn't really do anything. So eventually, when it started going up, I sold it when it doubled my money. And that was obviously a big mistake. Looking back where the prices are now, I mean, it would have been a very nice amount. But, that's kind of the learning curve. And then I kind of forgot about it for a few years. Not much happened. And then early 2017, I actually ended up selling one of my websites online through a broker. And they offered to pay me either in Bitcoin or in just normal US dollars. And I actually, Bitcoin went up to about $2,000 at that point. So I was like, no, it can't really go up much more. So I'm just going to take the US dollars again. That's my second mistake with crypto. But that actually got me thinking. And then crypto started going up and up and up, and started researching more. So about middle of 2017, I started putting together a few tutorials and trainings around cryptocurrency, because I had my friends and my family asking, what is Bitcoin? How does it work? And it gets repetitive to explain the same thing like 100 times. So it's better to just make a video and put it on a website. And this started growing. And then, there was more and more interest. The bull run continued. Things started going crazy. And then it kind of evolved into me just wanting to continue to do this and turn it into a full kind of training program. So that's basically how I got into it.
Where were you living at the time, like in 2014, 2017?
I used to travel a lot back in the days when we could travel. So I pretty much spent 3 months in the country, and then I'd go to another place. So I was in the US, I was in Europe, I've been in Asia, and just traveling around like that. So that's also one of the benefits with crypto and with online business, is you can do it from anywhere, with just your laptop. So that was a real plus.
Yeah, and because it's interesting, looking at where different people, like in different countries, how they come across it, or, it seems that it kind of emerges in places and spreads, and it's not uniform all at the same time necessarily. But one of the things that you just said, I think, is really interesting is the fact that you can do it from pretty much anywhere, any country. So you seem to be a bit of a nomad, and you kind of enjoy that?
I really do. I love to travel. I mean, obviously the last year and a half has pretty much restricted that, unfortunately. But I mean, if that ability is there and you're able to make money online, and you're able to do that with crypto or online business or anything like that, and you have the freedom to live in any other country that you want, I think it's one of the nicest things that you can do, and experience all the different cultures and countries and languages and everything that the world has to offer.
What country did you grow up in?
I'm originally from Amsterdam, from the Netherlands.
Netherlands.
I grew up in South Africa, actually, for most of my childhood. And then after that, like after I finished high school in my 20s, I just pretty much traveled as much as I could. So for the last 10, 12 years, I've just been traveling.
Well, you're truly a citizen of the world.
There's a lot of places I still haven't been to, but hopefully in future.
But that's sort of the story of crypto, right? Is the fact that it's this universal currency. It's not issued by any particular government and used in a single country. Whether it be the euro or U.S. dollars or won or whatever. But crypto is this ubiquitous thing that travels the world. And it seems that people like you who basically say, hey, I kind of grew up in one place, went to another place, and now I travel around, that this lends itself to that type of an experience in life.
I would say both yes and no. The concept of having a universal currency is very nice with Bitcoin. And the ability to send it anywhere, anytime, 24/7. I mean, if you try and send a wire transfer anywhere, it's going to take you, 5 days, and it's going to cost you like $100, something crazy. Yeah. Whereas with Bitcoin, that's not the case. But the thing with Bitcoin is also that because it's the scarce thing that keeps going up in value, people don't really want to use it as a currency, right? Because if you're going to buy something for $100 today, that might end up being $5,000 a few years from now, and you just don't want to spend your Bitcoin. But the technology itself, the blockchain, and now where we're moving towards maybe even stable coins, if they become fully regulated and compliant, like we have Coinbase's USDC, that actually already works like a digital dollar. I've paid people in it, I've received payment in it, it's instant, it's fast, it's cheap. It works on the same principles. Obviously it's centralized, right? But that as a digital currency seems interesting, and I think there's a lot of potential with that actually going forward.
Let's talk about stable coins since you mentioned them. So can you explain what a stable coin is and how you kind of described how you use it for transactional purposes, but how easy or hard is it to use that for transactions?
So basically a stable coin is a digital version of the dollar. Let's keep it to dollars because most of the world works in the US dollar. So it's basically a digital version of the US dollar that maintains its value one-to-one with the dollar. So one USDC is always going to be equal to $1. That's the concept behind it. And it doesn't have the volatility risk. So it doesn't go up in value, it doesn't go down in value. It always stays stable, and hence the name stablecoin. But it just operates on the blockchain and crypto technology in the same way that it runs on, for example, the Ethereum blockchain. So you can take this and you can send it anywhere in the world. Same concept. It arrives within 20 minutes or even sometimes within 10 minutes, less than $10, any amount you can send it. So it has the concept and the flexibility of crypto, but it still has the same value where it's pegged to the dollar, which makes it very interesting.
Yeah, in trying to understand, so what you can do basically is if you have, and I think it's USDT you said is the stable coin, right? Is that the one that you cited?
There's multiple. USDT is Tether, USDC is Coinbase and Circle.
I see. And so basically what they do is they create this and then if you've got $1,000 and you say you can buy 1,000 coins at that moment in time, and the value of those coins just go up and down as the dollar fluctuates. So it's almost like a dollar, but you're just making it digital, and then at that point making it portable, and that's why it's kind of easy to transact in that way. Where I guess Bitcoin, would you agree that it feels more like gold? You kind of buy it and store it. You're not really trading it that much out there.
Yeah, I agree. That seems to be what it's become. So Bitcoin has become this version of digital gold that you don't really use to buy stuff with. Basically, it's a store of wealth. You buy it, you keep it. Michael Saylor, CEO of MicroStrategy, he basically said Bitcoin is digital property. So it's a digital asset. There's 21 million of them. And if you own whatever percentage of that network, you're always going to own that. They can't make more than 21 million. That's what makes it so valuable. So, other people compare it to like if you own Bitcoin, that's like owning land in Manhattan or New York or whatever. You own that. And there's a limited amount of it, and it's just going to go up in value.
So what is your strategy around Bitcoin or any of the altcoins as far as your teaching? Because you now have courses for people. What are you trying to train them to do?
So the concept of crypto and blockchain is very difficult in terms of technology. Obviously for older generations, like my parents' generation and plus, right? They're not very good with computers already. So like they can barely use the internet and use email, start the computer, that kind of thing. But when it comes to crypto, it is pretty technical at this moment. It used to be a lot harder. It's getting easier because that technology adoption is there. And there's basically billions and billions of dollars that are being invested now to build the infrastructure and to make it easier. So over time, it will get easier and easier until you don't even realize that you're using it. But right now, there's still so many things that you have to understand how to use wallets, which wallets to use, which exchanges to use. So basically, I try and help with the basics, and I've got tutorials and trainings all around that. But also, I basically do this all day, every day. So I just keep up with the news, the developments, all that kind of stuff. And then I summarize everything that's happening, kind of like what I'm doing now in videos and newsletters and updates, to make it easy for the average person who doesn't have like 6 hours a day to study crypto, to just digest it, once a week or twice a month, and just kind of follow along and understand how this progress goes. Because crypto and digital assets, at this point, they're here to stay. Like, that's undeniable. The banks are getting involved, billionaires are getting involved, hedge funds, even literal countries like El Salvador is giving away $30 in Bitcoin to every citizen, which is insane. Yeah. So basically at this point, and 4 years ago, that wasn't the case. It was still questionable. But at this point, I would say digital assets as an asset class is here to stay, and it's going to get much, much bigger over the next 5-10 years and maybe even more. So getting involved with it early, before people understand really what's happening, before the masses understand, can give you such a big advantage. And there's so much money to be made. Like, imagine you got in Google early, or Amazon or Netflix, or any of these things kind of on the ground floor. That's kind of where we're at, because I think we have about 200 million people who own crypto out of the whole world at this point. So that can 10x or 20x, over the next 10 years.
You mentioned wallets, and this is, I think, for people who are entering the crypto world for the first time, it's one of the areas that creates confusion or hesitancy, right? Saying, well, wait a minute, I go in, I have to, I guess, get on an exchange like Coinbase or Kraken or something, and then I transfer funds in and I go ahead and start buying some stuff. But now I'm told that it's at risk and I have to keep it in this wallet, which is, usually a USB drive, how you describe it. But I'm kind of confused about that. And then what happens if I lose that drive, or, et cetera, et cetera. So can you explain the whole wallet phenomenon and why it's important and how to use them?
Yeah, absolutely. So it's kind of like a double-edged sword. It's interesting. So with crypto, you're actually your own bank. You're your own custodian, which for some people is very nice, because they have full control over their money and over their crypto, basically. But the flip side of that is that it's your responsibility. And thus, if you lose your crypto, you lose your wallet, or you lose anything like that, you can't call a bank, you can't file a chargeback, you can't do anything like that. So if you lose it, it's gone, right? So I think that's a bit of a scary thing for a lot of people who are getting into this. And maybe it's going to be an issue going forward for really mass adoption. So I think there's going to be solutions in future that are going to kind of reduce that risk a little bit. But at the moment, the whole saying, there's a saying called "not your keys, not your coins." So basically, to own cryptocurrency, you have a private key, which is basically like your password to access your crypto. So if you purchase crypto on an exchange, it means that exchange holds those private keys. They're basically a third-party custodian. So if anything happens to that exchange, if they freeze your account, if the exchange gets hacked, if they disappear and they, go to the Maldives or something and shut down their exchange, your crypto is gone, because you can't touch it, right? It's still, you're basically trusting that exchange to hold on to your crypto. But what you can do, so you have a wallet, which is basically like an app, or sometimes you get a physical hardware wallet, like a USB device you plug into your computer. If you have your crypto on there, it basically means you fully control it. So even if the exchange disappears, whatever happens, it doesn't matter. You have your crypto that you can always access it. So in that way, it's really nice, especially, if things get a bit more chaotic in the world, or things start happening with banks and there might be banking crisis or anything like that. We've seen it in history. One day you can wake up and the bank can say, sorry, we don't have any more money. You're limited to withdrawing $100 a day. And that's it. And what can you do, right? You can't do anything. But if you have your crypto in your own wallet, it doesn't matter what happens to the banks, because you own your crypto and you can always access it. And that is also, I think, a very strong narrative to why crypto is going to get so much bigger, because I think more and more people, as they start seeing what's happening in the world, are going to start to realize, like, hey, I want some insurance, I want a bit of a safety net. Maybe I put 5 or 10% of my money into crypto that I can hold it in case something happens with the banks or whatever it is, that I have full control over it. So there's a lot happening in the crypto space that makes it very interesting.
Now, what happens if I have a wallet and I lose it? Like I lose the, let's say the USB drive. Then it's just like saying you had a physical wallet with cash in it and you lost it. It's gone basically for forever. Correct?
A little bit. It depends. So you can actually lose the computer or the drive or the actual physical wallet that you have the crypto on, as long as you have the private key. So this is basically like your password. Sometimes it can be broken down into what they call a seed phrase, which is basically like 12 or 24 randomized dictionary words that unlock your wallet. So as long as you have access to those keywords or those seed phrases, you're able to always recover your wallet. It doesn't matter if your computer disappears or gets stolen or anything like that. If you have access to those words, you can restore it. And that's also a nice thing, because you could actually memorize those 12 or 24 words and basically have your bank account right here, in your head. It's really interesting. You can have millions of dollars just memorized. That's it. Like no trace of it anywhere, purely just by memorizing it. And of course, you shouldn't forget the keywords, because you can lose all your money.
So what do you need the USB drive for? If in other words, if you have the words in your head, what's the function of the actual the physical wallet part or the USB drive?
It's basically an interface. You still need to be able to interact with the blockchain, and you need to be able to send those coins and access those coins. So the words are basically just the password that unlocks it, like a key that opens your door. But you still need all the stuff in the house, right? So the wallet is just basically the interface that allows you to access the blockchain, that allows you to spend your coins that you have.
Got it. And do you have can you name some of the wallets that you think are the better ones?
Yeah, so in terms of physical hardware wallets that are basically the safest way to protect your crypto, there's two. It's called a Trezor and a Ledger. And they're basically, I don't have one with me right now, but basically it's a small little device. It's like a USB. You plug it into your computer and it allows you to securely access your crypto. And basically what it does is it avoids you having to type in your password on your keyboard, so that you can't have, malicious viruses or programs that are basically watching which keys you type in. So it avoids any programs being able to steal your password while you're typing it in. It's like an extra security level.
I see. And is there a danger that like you talked about, like an exchange that could get hacked, or maybe they head off for the Maldives? I think you said. Is there danger with a company like Ledger or Trezor or any of those that would that they might go south somehow, or it doesn't matter?
Well, the thing is, it doesn't really matter if the company exists or not. If you have that device, you're always able to use other programs. If you have those 12 or 24 words, you can use other software to be able to always access your crypto. So it doesn't matter if Ledger or Trezor, if they go out of business or they never sell another hardware wallet again. That it absolutely doesn't matter, no.
Yeah, so basically, and thank you for getting into the tedious part of this, but I find from people, from viewers, this is an area of confusion for them. So basically, your crypto is still stored on the blockchain. It's just a matter of how you access it and identify yourself. So it's not like you're walking around with your crypto on the USB. It's still on the internet in the blockchain, but this is the way that you can access it safely and guard it, I guess. Is that what it amounts to?
Yeah, it's an interesting concept. So you don't actually have, physical coins in your hardware wallet or anything like that. The coins are basically, they're on the blockchain, but your hardware wallet or your password, whatever, allows you to access the coins that you own within the blockchain and basically interact with them, and allows you to spend them how you want or keep them or anything like that. So that's also a dangerous thing, because anyone who has access to your private keys or your hardware wallet has the ability to then take your crypto and spend it.
Yeah.
Maybe like cash, if whoever has the cash can spend it.
Yeah. So do you focus solely on Bitcoin, or do you look at altcoins also?
I look at both. So altcoins are interesting. I know there's people who are complete maximalists and they think Bitcoin is the only cryptocurrency and everything else is garbage. And there is a lot of garbage there, to be completely honest, because the space is still so new. There's a lot of new technology. There's a lot of unknowing participants. There's basically no regulation. It's starting to come, but that gives people a whole lot more options than there are in the traditional financial markets. And obviously there's a lot of unethical, bad people who try and take advantage of that because there's basically no recourse. Things that are illegal in normal financial markets are kind of a gray area, or maybe even permissible in crypto for now. I think that's going to change over the next few years. But because of that, obviously there's a lot of scams. And that's why, also one of the reasons why I do this training and this education about crypto, because there's a lot of people that don't understand how it all works, and it's difficult. And then it's very easy to get scammed and lose a lot of money. I've witnessed it firsthand from a lot of people who have lost tens of thousands of dollars because they installed the wrong scam hardware wallet, or they trusted someone on a social media network who was going to trade for them, and they sent the crypto and it's gone. So there's a lot of things that you just need to be aware of, and just even a little tip, you'd be like, hey, that's a scam, or hey, don't do this or don't do that, can save you a lot of money.
When you teach people or instruct them, are you teaching trading at all, or you mostly train them just on how to buy and hold as an investment? What's your approach towards getting into crypto and kind of managing an account?
Yes. So my thoughts on trading, after having tried it for many years myself and in all various forums and having studied it and all this kind of stuff, is basically the odds of being successful with trading are minimal to none. And there's a very small percentage of people, like with anything, I don't know what the number is, 10% or less, maybe it's less than 5%, who can actually be profitable doing day trading as a living. And anything with leverage and futures, it's very, very difficult to do. Not really because of the technical part of it, but more because of the risk management, emotional part of it. Mm-hmm. Most people, you're just not designed to take losses on a daily basis. Mm-hmm. Emotions come in, fear, greed, panic, and it just causes you to make bad decisions. And you can trade successfully for 1 year, and then you make one bad decision. If you don't have your discipline, your systems in check, you can lose everything you've worked for the whole year. Mm. So my kind of view on trading is that it's not something that you should do as a living. I think there's better things to do. I mean, you can try it, but the odds are so against you. I think the best thing for most people is just buy and hold. And within crypto, there's bull and bear market cycles and very large swings. We've seen that. I mean, we've seen crypto go up 10,000%, and we've seen it drop, 99% after that again, and then it goes up and down. So there will be times to enter and exit the markets with a buy and hold strategy. But I would say as a daily kind of thing where you're trying to constantly trade and do that kind of stuff, I prefer to stay away from that because it doesn't work for most people.
Why do you think there are these radical swings? What's driving, Bitcoin? I think it went up. It probably peaked somewhere around 65,000 or so, and then it can drop down to 30, pretty quickly, and then rebuilds. So we've been, I've been at least for a little while watching these cycles. What's driving the swings? Are there people that you think that are kind of moving and manipulating that market, or is it something else?
Yeah, absolutely. I think there's a lot of manipulation going on in the space. Mm-hmm. Again, because it is still so unregulated. And there's a lot of people who got involved very early who have enormous amounts of cryptocurrency, and they have the ability, they refer to them as whales in the crypto market, right? A whale, someone who just has huge amounts of coins. Maybe they have, 10,000 Bitcoin that they got. Because back in the day, it was less than $100 for a Bitcoin. It was $50, $10. So there's still people who have these huge amounts of crypto that's now worth, maybe billions of dollars, that can massively influence the markets. And I think a lot of that stuff is happening behind the space. But I think over time, as the market grows in market cap, and over time, as more and more participants start buying up Bitcoin, it gets more and more distributed and decentralized, right? There's only 21 million coins. So if over time, families or just regular people start to buy, half a Bitcoin or Bitcoin, over time, 21 million isn't that much. And then once all that Bitcoin is more evenly distributed, it becomes much harder for people to manipulate these markets, especially if we go into $10 trillion market cap or more. The swings become less and less. So as crypto continues to grow, I think the volatility will start to decrease. But we might still see this volatility for, another 4 years or another 8 years before it kind of starts to level off a little bit more.
So if somebody is new to this and they're entering for the first time, what is the advice you're giving them? Because I think that's, in essence, what you said you sort of do. You're trying to, give people some orientation toward, the crypto world, and then kind of guide them through it, and then give them updated information. So somebody's coming in and they're new, saying, okay, I've never done this before. Step one is, I guess, set up a brokerage account, or maybe step one is figure out how much money do you want to invest and make sure it's not too much of your total investment money. Walk me through kind of like how you initiate somebody into this.
Right. So I just want to say I'm obviously not a financial advisor, so I can't advise anyone what to do. I basically just share my experience and insights and guidelines. And the most important thing before any sort of investment is the risk management. Everything else doesn't matter, because if you don't manage your risk properly and you invest more than you should, you're going to get wrecked at some point. So kind of what experts say is less than 10% of net worth into crypto, because it's so volatile, right? So even with 10% invested, if a crypto goes up 10x, which we see a lot of the time, even last year, Bitcoin has gone up more than 10x, right? So even a 10% investment can double your entire net worth. If it goes 50x, which we still see pretty regularly, then you're basically 5xing your net worth with a 10% risk if it goes to zero. And the chance of it going to zero is pretty slim, in my opinion, based on just everything where it's going. So that risk is so important. A lot of people come in here and they have this short-term mindset, this, I want to get rich by next month, I want to make millions from Bitcoin, and they invest way too much. They have the wrong mindset. And then when crypto inevitably does drop, which it does, 30, 40, 50%, sometimes in a matter of a few weeks, these people who are overextended, who don't have that long-term mindset, they panic sell. They take a big loss. They take a 50% loss, while if they were within their risk management, they could comfortably hold it for 3, 4, 5 years and then come out with a massive profit. But because they had the wrong, kind of foundation, they ended up with a loss, and then they think, oh, crypto's a scam and everything. And that's basically how it works. So that's why the emphasis on the mindset and the right strategy and the risk management is the most important thing for most people, because there's so much excitement also behind crypto. You see it on the media and everything's going up, and, maybe your friend or your neighbor tells you like, oh, I'm up $100,000, I bought a new car or whatever from crypto. And then you just want to get involved. But if you don't plan it properly, that's likely to end badly, So the risk management is the most important.
And so you take a small amount, that if it went to zero, it really won't destroy your life. You'll be fine. And then next step, open up a brokerage account. What do you have brokerages that you like better than others? Like which ones do you recommend?
Yeah. So after you have your foundation and you have your plan and you understand a little bit what everything is and how it works, you can get started, buying your first Bitcoin or altcoins or whatever you want to buy. And the easiest way, it's getting better and better. But there's a lot of exchanges, like we talked about a little bit before. It's dangerous. Not all exchanges are legitimate, right? So what I would recommend is only going with the top tier kind of exchanges that are regulated, that actually have licenses that are compliant. So one of those is, for example, Coinbase. That's one of the largest exchanges. It's in most countries in the world, you're able to access that. They're a little bit more expensive on fees, but you can be assured that, they're compliant, they're safe, they're not going to exit scam or anything like that. So we have Coinbase, we have Kraken. I think they're also fully regulated in the States. We have Gemini by the Winklevoss twins from Facebook, right? They started Gemini Exchange. So I think those three are probably the most compliant and the easiest ones to stick with: Coinbase, Kraken, and Gemini.
And so then at that point, it's set up your account, put the money in, and buy what you think might be the right thing. The safest, I guess, is maybe Bitcoin, saying that's kind of the most, I don't know if safest, but maybe probably a good place to start as compared to some obscure altcoin that that somebody's telling you they think is good. It's only $1.20 a coin, and it's probably going to go to the moon. Well, that's probably a much riskier bet than investing in Bitcoin. So do you recommend starting with something a little bit more standardized like Ethereum or Bitcoin?
So the risks are different, and that's also obviously where the education comes in to understand what all these things are. So Bitcoin would be kind of the safe thing, right? Because it's the most established one, it's the largest market cap, it's the most well-known, all that kind of stuff. So the thing with Bitcoin is it's safe because you can probably be sure that in 5 or 10 years from now, Bitcoin is still going to be here. The other altcoins are much more risky because you don't know if they're still going to be here in 5 years from now. You know, they might be completely dead. The thing with Bitcoin is it's decentralized. We don't know who the founder is. It just runs. It's an open source protocol. A lot of these altcoins, they actually have founders. They have teams behind it. And it's more like a startup or a business, right? And so the risk of a startup or a business like that in this space going under because of bad management or, you know, whatever, even if they're not bad actors, if they're not, you know, have bad intentions, they can still fail. They can run out of funds and the project can disappear. So there's a real danger with these altcoins if you think about holding them for the long term. But in the short term, especially in certain phases of these bull run cycles, the altcoins can massively outperform Bitcoin. So if you have a higher risk tolerance, you can put a bit of your allocation into these altcoins. And instead of, you know, where Bitcoin might do another 5x, maybe an altcoin does 30x or 50x or 100x. And that way you can play around with your risk and your reward.
Yeah. Yeah, it's always interesting. Now, you know, people look at Bitcoin and say, you know, the time that we're recording this, it's, you know, I didn't check today, but, you know, let's say 48,000 or so is what it's trading at. But you don't have to buy a whole Bitcoin, right? You can say, I've got $3,000. You can buy $3,000 worth of Bitcoin, even though a Bitcoin might be $50,000. Is that right?
Exactly. So that's the thing that a lot of people, they don't understand about Bitcoin. It's like, oh, they see it at whatever, 30, 40, 50. Maybe one day it's going to be 100 or 200,000. People are going to be like, oh, I can't afford a real, like a single Bitcoin. And that's the thing behind it. You know, even just one Bitcoin could end up being $1 million one day. Who knows? But each Bitcoin is divisible into 100 million units called Satoshis. So you can buy a millionth of a Bitcoin or, you know, like 1 million Satoshis. So like you say, you can buy $100 worth, $3,000 worth, $5,000 worth. And this is a phrase, what they refer to in the crypto community is called stacking the stats, because it's Satoshis. So you stack the Satoshis, right? So it doesn't matter if you have $50 a week, you just keep stacking those Satoshis because in the long term, the expectation is that maybe one day Bitcoin becomes the world reserve currency and who knows, it goes to $1 million. And even that $50 that you put in could end up being worth a lot more, you know? And over time, the compounding effect, dollar cost averaging, you put in $50 a week for the next few years, that can end up being worth a significant amount of money 5 or 10 years from now, you know?
And that's kind of an interesting approach, I think, where you talk about saying, hey, you know, somebody might say, well, you know, I make, you know, barely enough money to pay my bills and pay my rent and whatever I have to do. But I do have a little bit of money to invest, but it seems like it's not enough to actually enter into this. But to your point, you know, especially if you're saying, hey, I'm going to put away a little bit of money every month and I want to put some of it into Bitcoin, you can put in $50 a month, $50 a week, whatever it might be, and as you said, stack it, you know, over time and just keep investing in there and accumulate, you know, as you continue to, you know, work through your life. And especially if you're in your earlier years of your life or career, you know, you really have a lot of years to build in there. So this isn't, because I think a lot of the impression of crypto in the crypto world is it's for high rollers, you know, that have a lot of money that want to go, you know, enter into the casino and play. And you know, then of course, what do you see in the headlines for all the crypto billionaires that are in Puerto Rico and all this kind of stuff? But the reality is, you know, the everyday average person that gets up and goes to work every day could still invest in this and start to accumulate some wealth in it. Is that how you see it? And is that who you're trying to reach?
I think absolutely. I mean, like everyone needs to think about their financial future, right? And obviously there's not a lot of clarity and education really about what money is and how money works. Most people have no idea, right? And they'd rather go and watch Netflix and do something else than actually educate and learn how they can kind of protect their future savings. The thing is, if you keep your money in US dollars in a savings account, you get basically no interest. In some countries, it's even negative. Like you have to pay the bank to keep your money in the bank. And the money keeps on devaluing in purchasing power every single year. And the more money they print, the more it devalues. So I think the US dollar lost about 90% of its purchasing power over the last 100 years, something like that. And it just keeps getting less and less. So life keeps getting more expensive. There's inflation. And if you don't prepare for that in some way, if you don't own assets in any way, you're going to have a problem in 5 or 10 years from now or 20 years from now. By the time you want to retire, you basically can't afford anything, right? And the problem with traditional assets is that there's a high barrier to entry. If you look at real estate, you need a huge amount of capital, you need a credit score, maybe you need to be an accredited investor, right? The same thing with stock markets and traditional investments of that sort. But Bitcoin is now a digital asset, and there's basically no barrier to entry because anyone can do it. You can sign up to an exchange. You don't need to be an accredited investor. You can put in 50 or $100, however much you want. And then you have a piece of a very scarce network that so far has only just continued to go up in value and will probably continue to do so. So even if you save $50 a week or $100 a week, maybe think like, what can you do? It can't be that hard to make an extra $100 or $200 a week, right? Maybe do some freelance work, see what you have lying around the house that you can sell, and put that into crypto for the long term. Forget about it. And maybe in 10 years from now, you're going to be very happy that you did that.
I really like that, Dirk. And it's interesting that, again, so many people are talking about the big game, but there really is, I think, a path to walk here for everyday working people, which is the majority of the world. And they don't need to be sort of squeezed out of this where, the rich just get richer, so to speak, and, people who are wage earners every day don't get the opportunity. And I think that's one of the great things about crypto is that it is a democratized way of having a monetary system, and that anybody can really enter it. It's not the like the rich boys club at on Wall Street, and all those people who manipulate markets and bankers and everything else. It's basically this decentralized way for anybody to get in and say that I can participate in this, and that's what I appreciate about the work you do. You're kind of like translating it for those people so that they can get in and hopefully create a better distribution of wealth throughout the world. Any final thoughts or comments before we tie up?
That's a good question. I mean, I could talk for hours about this. Yeah. Basically, what I would say is the cryptocurrency, like digital assets, whatever the official name is going to end up being, is a real thing here now. And it's confirmed. I mean, the banks are involved, PayPal, billionaires, funds. This is going to get much, much bigger over the coming years and maybe decades. Mm-hmm. And you would do yourself a favor to learn about crypto now. Just educate yourself. What is Bitcoin? How does it work? What is the money system? Start to look into that a little bit more. And as you go down that rabbit hole, even if you don't buy any crypto, you can educate yourself about this because there's also opportunities besides investing in the tokens themselves. If this is going to become one of the biggest asset classes over the next 10 years or so, there's opportunities to start businesses, to start consulting, to start doing so much in the space. And the ability that it's 24/7, that you can do this from a laptop from home, it basically in today's world environment, I think provides an enormous opportunity for, perhaps opportunity that has been lost or that has been disappeared. You have to adapt to what's happening in the world. And I think we're moving towards this digital economy, and digital money is basically a huge part of that and a part of the future. So I think it would be in your best interest, if you're watching this, to go and learn about crypto and to at least educate yourself a little bit about it.
That's really terrific. Well, I appreciate you. I know it's late at night where you are, so I appreciate you staying up and having this conversation with me. Really insightful, a lot of great information here. So thanks for the work you're doing around this and how you're getting it to people, and thanks for sharing your time here today.
Thank you very much for having me on the show, and much appreciated.
Well, that's it for my interview with Dirk Debruin. What a great guy. I love the work that he's doing and the audience that he has attracted. And he has his own unique way to kind of communicate this whole world of cryptocurrency. And I know that there are many people who got their start by listening to his advice and following his trail. I'm hoping it was helpful for you too. So thanks for being here for this interview.